Good morning, good morning. How's everybody doing today? Nice to have you guys with me today. Can you guys hear? Can you guys hear my voice? Beautiful classical music in the background. We got a nice orchestra here in the room with me. Just give me the A-OK that you can hear me, and then we'll get started. Good morning, good morning. Can hear you great. Yes, confirmed. No problem. Good. Glad to hear it. All right, good stuff. Well, guys, we've got an episode today, man. This is going to be a good one. There's a lot going on in the markets, as you can tell. We've got, boy oh boy, we've got the markets rallying, the S&P rallying. A lot of talk about interest rates. A lot of talk about interest rates and pivots, and it's so confusing when you listen to what the media has been throwing out there in the last month or so. It's so confusing. It's no wonder that traders are like all over the place, because how are you supposed to know what the heck to do? I mean, you're being told all sorts of things from all different angles. It's next to impossible to be able to know exactly what's going on. So we're gonna break it down from my perspective, what I see clearly happening, because to me it's pretty clear what's going on. Okay. And I've been posting about this on our Telegram. I've been trickling a little bit of information out on the Twitter, but mostly what I've been putting out there is what was in the what's been in the Aruja report for members. So I'm not going to go into great detail about things, because that's what members pay for, is all this information, all the analysis of what the institutions are doing. Okay, that's important to know what the institutions are doing, because they are the ones moving the market. All right, this is not a random market like everybody would like you to believe. Markets are not moving based on economic data. That's not what's happening here. The market isn't just moving depending on what happens with the Ukraine and Russia scenario. There aren't bankers sitting by their desks going, okay, let's watch the news and see what happens with Ukraine and Russia and then make trading decisions. That's not what's happening. Okay? That's the idea that they're creating, that things work like this, but that's not what I see. Okay? And I don't see that at all. Okay? What we're seeing is something completely different. This is a very calculated market. All the moves that are taking place are extremely well calculated. They are predictable. Okay, this is why we are able to forecast the markets the way that we do, because they are predictable. Their moves are predictable. The headlines are predictable. Okay, you just ask any member that's with us and they'll know. We can even predict what the headlines will say days before it happens. Okay. So we're going to dig into that today and share some of that information with you guys so that hopefully you can use it to make some good trading decisions going forward, okay? All right. As we saw in Bitcoin, I was looking at Bitcoin this morning. I was looking at her this morning. She dropped right through the weekly area of demand. Well, we've been talking about this for the longest time, right? So they may have all the headlines come out giving you reasons why Bitcoin is dropping. But at the end of the day, Bitcoin is dropping because it was meant to drop. Okay? That's the bottom line. It was meant to drop. Okay, so we'll go through that one as well. But first, let's start by taking a look at what's happening here on the SPY. All right? So this is S&P 500 futures. This is where we're at right now, 38.10. And so let me just make some drawings here, because I'm going to draw a couple areas here. The first area here is this, okay? Now you might be asking yourself, what is this big rectangle? What is this? Why is he drawing a big rectangle? Okay, so as you know, we track the CFTC reports, okay? We track the CFTC reports, all right? some of you are probably saying, okay, what the heck are the CFTC reports? Okay, CFTC reports is if you go to cftc.gov, all right, you go to this website. This is the website. This is this is where you can get all the data that was submitted by all the large institutions. The biggest institutions in the world have to submit their positions in the markets to the CFTC, okay? The Commodity Futures Trading Commission. They have to report them. I know, it sounds like, what the heck, this is too good to be true. I know, it is. It is true, okay? Is it too good to be true? No, it's not too good to be true, all right? It's legit. So, for instance, if you come here and you click on the Chicago Mercantile Exchange, right? You click on short format. What you'll see when you scroll down is the positions held by the big institutions, all right? You'll have the currencies, cheese, look at that, Canadian dollar, Swiss franc. Now, a lot of people say, why are you switching longs with shorts? Well, because these are futures, okay? So if you look at a Canadian dollar futures chart, if the Canadian dollar is strong, it moves up, all right? But we don't trade the Canadian dollar futures chart. We trade the currency chart, right? So when you trade the currency chart, when you look up the currency, what do you type in? You type in US dollar and then Canadian dollar, correct? All right. So that means US dollar comes before Canadian dollar, which means if the American dollar is strong, then this chart moves up. So that's why I switch longs and shorts, okay? Because the currencies and the futures are opposite of one another, okay? So when you look at a futures chart, it will move up when it's strong. So if they're telling me that 38,000 contracts are long and 56,000 contracts are short because I trade the currency, the US dollar CAD, I reverse it, okay? I switch them around, okay? That's why I switch it around. A lot of people always ask me that. So we scroll down, you know, Japanese yen, you go euro, New Zealand dollar. I mean, it's all here, okay? All their positions. And so then here's another one right here that I like, right here, okay? You see that? This is the S&P 500. That's consolidated. You don't have to go for the consolidated. There's another one here, S&P 500, right here, S&P 500, okay? E-mini, okay? So now a lot of people will tell you a lot of different things, okay? But most people out there are going to tell you that when you're looking at the CFTC data, you should be focusing on the commercials, right? Everybody tells you that. And I'm here to tell you that if you focus on commercials, you're not going to see what's happening in the markets, okay? You're going to be late to the game. And I understand the logic of why they say you should be looking at the commercials, but it's completely flawed, okay? This is coming from somebody who's been following and tracking the CFTC data very, very closely, but with one very important thing: knowledge of institutional buying and selling and how to locate it on the charts, okay? You have other people that come out and say, oh, you should track the commercials. That's where the big money is. But what they don't understand is supply and demand dynamics and how to locate it on the chart and how to understanding how price moves on the charts. So because I have that knowledge, I was able to compare what non-commercials and what commercials were doing with their positions and looking on the charts, and I came to realize very quickly that non-commercials are the ones that you want to follow, okay? And when you track the non-commercials, you see how 90,000 positions are short and only 55 are long, okay? A large portion of that 90,000 that was added, guess where they added them? That's an interesting question, right? Guess where they added those positions? Would you like to know that? Where they added those positions? I will circle it for you on this chart, right here. Okay? Isn't that good information to know? If you knew that non-commercials are the ones that you want to follow because when they're shorting, the market drops. When they go long, the market rallies, period, end of story. And they're the ones that are trying to speculate on market direction. They want to short when the market drops so they can make money. And they want to go long when they think the market's going to go up. And because primarily they are the ones that are moving the market, If they're buying, guess what? The market's going to go up. Okay. So this is the location where they were adding a large portion of their short positions. Okay. So much so that it caused this very massive drop in price. Okay. So what do you think would happen? Just using logic. Okay. Just using logic. What do you think would happen if you knew that here's where the big banks were shorting this market, and then price makes its way right back up to this area? What do you think is going to happen? What would logically your mind tell you would be happening here? If somebody came up to you and said, hey, listen, the big banks, we're getting in short the market, you know, what you would want to say, or what you should be saying in response to that is, oh, the big banks are shorting the market? Question for you. Are the big banks the ones that are controlling the direction of the market? Answer, yes, they are. Oh, wow. So the market isn't random? No, it's not. Oh, wow. So you mean to tell me when the big banks come in and they short the market aggressively, they are going to control the movement of the market to the downside? Yes, indeed. Oh, how can that be? Because sometimes I watch the news and the news comes out and it's positive and then the market rallies up. Aha, now you're asking good questions and there's answers to that. But we'll talk about that in other episodes, and we've talked about that before many times. But the question should be, if the banks are controlling the market, if they are the ones that are pushing it down, then wouldn't you want to know what the banks have been doing over the last year? Last 6 months? Last 3 months? Last month? Yes, you would want to know that. And you know what they've been doing over the last year? Over the last year, they've been taking profits on their long positions that they've been holding and slowly shifting their focus from longs to shorts. Okay? That's what they've been doing. And the last installment of the big infusion of short positions into this market was right here, exactly where I have drawn. Okay? So, if you know that over the last year they've been preparing to short this market and they've been shorting this market and they've been taking profits on long positions, and the last installment of big short positions were here and price has rallied up to here, who in their right mind would even think about going long this market? Nobody should even be thinking about going long this market. So when you see the headlines, oh, listen for Mr. Powell. If he says this word, if he says this one word, then that's very likely the markets are going to continue higher. Do you think maybe there's a chance that the reason why that's written is because in order for price to get up into this area of selling, you'd need buyers, right? And if the banks are so focused on selling, do you think they're going to be buying up here? Well, I mean, maybe a little bit to instigate the move. But if they're going to be looking to sell up in this area, what do they need? They need people buying. Okay? In order to sell, you need buyers. So how are you gonna convince a bunch of retail traders to be buying the market up in this area? Well, first of all, you can't tell them they should be looking at the CFTC report. You can't tell them that they should be looking at non-commercials, right? You can't be telling them to track all the CFTC data week after week after week in spreadsheets and color code them and look at the data and compare it to what actually happened technically on the charts. You can't be telling them that, because if you told them to do that, then they would see clearly what's happening with price right now. And you wouldn't even be thinking about buying this market. Okay? So that's the first thing you should know about the S&P 500. You can speculate. People can speculate all they want, and I hear a lot of speculation. I hear, we're going to make new highs, we're going to this, we're going to that. And this is all speculation. I'm talking about reality. Reality is the banks move the markets. Reality is they've been shorting it hardcore. And the last installment of shorts is exactly where I just pointed. And price is using, and the media is pushing this narrative that, you know, leading up to midterms and after midterms, the market typically rallies 15%. Oh, that's interesting. Isn't that the type of headlines you'd need if you needed price to rally up into areas where you were thinking about coming back in and selling the hell out of it? That's exactly what you would need. So it's interesting how those things work out like that. That's the reality, okay? Now, if something completely happens that's different from this whole narrative that's been playing out over the last year, then that's something else. And the chances of that happening are very, very slim, okay? Because as we've mentioned so many times before, the banks don't spend a year preparing for something, only for last minute they change their mind and do something completely different, okay? So I'm just talking about the reality. I'm talking about the facts. I'm talking about all the evidence that we've gathered over the last year or so, okay, of what we've been able to see with the S&P. So that is what is happening with the S&P, folks, okay? That is what is happening. So any questions on that? SPX is looking for big move today. Good morning. Continue short, but they will then go long again. I have a question, please. Do the banks ever trade against each other? Do the banks ever trade against each other? Okay. Well, the banks trade against themselves. Okay. When you track the CFTC report long enough, you'll see that they open, listen, their positions, it's like monopoly money. Okay. All right. They do what they need to do to move the market. That's what they do. All right. They're not, if they open up a long position and price drops, they're not like worried that, you know, that long position is going in the hole. Okay. They don't care about that. They open up longs and shorts in order to move the markets, to instigate moves, to instigate, you know, emotional trading from the retail side. So they open up positions against themselves, but their core positions are always profitable. Always. Okay? Because think about it. When you move the markets in the direction that you want it to go, short term, long term, you know, then you're going to be profitable because you have to have more shorts than longs for the market to drop, period. Okay? So they are profitable all the time. So all the big banks, in my opinion, are working together. Okay. And when you look at who owns these banks, they all own each other. You understand? So really the banks aren't against each other because they all own each other. All right. This is how it works. It's not like Bill owns this bank and Bob owns that bank and Frank owns that bank and they're all like fighting against each other. That's not how it works. It's a bunch of families that own the banks, but then they own shares in each other's banks. Okay. So they all have a vested interest in all the banks being successful. Okay. So they're not against each other. It doesn't work that way. Okay. So these are things that I've discovered by investigating these banks, looking into who owns their shares and so forth. All right. Okay. So that's what's happening with the S&P. Hi, Kevin. So another big move down is likely to be in the supply zone soon. Well, you know what? Listen, price got really close to contacting that supply area, okay? This is it right here. Okay? Price got really close. And a lot of times, price will move prematurely. Okay? A lot of times, it doesn't actually go into the meat of the supply before it starts to head lower. So we could see the beginning stages of that selling taking place. This could be the beginning stages. We won't know 100%. Until this Friday when the data comes out. Because when the data comes out, it's going to tell me exactly what happened with this candle here. But I'm pretty sure that this is the beginning stages of the selling, okay? Whether they're going to take it past these highs into the meat, that's still, you know, in the air. We don't know for 100% if that's going to happen or if we're going to be seeing a drop take place from here. And this comes to something that we were talking about yesterday. I was sharing with the members about, you know, your different options for selling this market. Okay. Because there are multiple outcomes that could take place. All of them lean towards a drop that's about to happen. All of them. Okay. If I had to rate what are the chances that there's going to be a rally and break through this area, okay, the chance of that happening right now, I'd say, is about 10%. Okay? The chance of that. The chance of a drop happening right from where we're at right now, I'd say, is about 65%. Okay? And then there could be a rally up into this area and then a drop. That's a little bit lower odds, but, 65% drop from here, a rally and breakthrough supply, 10% chance of that. So everything is pointing in the direction of price is going to be heading lower over time. So I don't want to be focused on anything else except for shorting. That's the way to go with this market. Until the market tells me something completely different is about to happen, I'm not going to be focused on doing anything else but shorting this market. Okay? But there's ways to short this market. There's ways to short it in this area, adding to your position here, adding to your position here until our eventual targets are hit. There's ways to do that. Or you can wait for this to happen or wait for this to be taken out. There's many different ways to get into this market and control your risk. Okay? All right, so that is that. Recent rally up in the SPY took place because we contacted institutional buying area. This is an institutional buying area here, down the 3700s. And this recent drop is happening because of this 4-hour area of supply here. Okay? So we could see, a range and then a breakout, or a range and then a drop. It's one of the two. Okay? But once it comes up here, it's going to likely drop high odds. Very high odds. Okay, so that's the SPY. Let's take a look at gold, shall we? All right, so gold. So we've been tracking gold for some time. We knew that price was going to drop. We could follow the positions. And if you guys have been following the YouTube videos that we've been posting, the CFTC analysis, you've known for the longest time that we were tracking the banks as they were shorting the heck out of gold. So there was no other option except for shorting gold. So we shorted gold. We did well with it. And I got out down here at the lows. Okay? Right here is where I got out. Why? Because when examining the markets, there is a good chance that we were going to get a rally. Okay? And look what happened right after I got out. A rally up into supply. Drop. It could not go lower. It could not go lower. This is the reason why I wanted to get out of my short, because we were seeing evidence in the market to suggest that the banks were going to be pushing gold up. Okay? And so now we're getting that rally again back up. So the question now is price going to sit here? Is it going to continue to rally higher? What's going to happen? Well, there's very good odds that price is going to continue to rally from this area. Okay? And this is coming from recent evidence that we've been uncovering with respect to the dollar, the euro, and many other currencies. And we'll touch upon that in a minute here, okay? But we still have this weekly area of supply that is in play, okay? And until that area gets taken out, no upside can happen, all right? So there's a good chance that this holds for a while. It can drop price a little bit lower, but recent evidence is suggesting that we could see a bigger push to the upside. Okay, so what is that evidence? We have to go over to the dollar in order to locate what this evidence is, okay? To point out this evidence. Okay. So here we have a chart. Actually, let me get to, let's see. Yeah, weekly chart. Here we go. Here we go. Here's a weekly chart of the dollar, okay? And you hear a lot in the news. What's going to happen to the dollar? Have we peaked? Is it going to drop? Why is it going up? The interest rates. And maybe it's because of the interest rates why it keeps on going up. All sorts of stuff. Why is the dollar peaking here? There's a lot of speculation as why the dollar is peaking here. Dollar's peaking because we entered into an institutional selling area, okay, that we located, all right? A very high quality institutional selling area we located up here. So we knew that this was very likely going to be an area where the banks were going to take profits on long positions, okay? So as we're watching price play out, we're noticing these institutional selling and buying areas on the charts, and we can forecast what will likely take place when price enters into these areas. And so that's what we do. In the Arusha report, I point out these areas and I say, you know, it's very likely that the banks are going to start taking profits on long positions, and that will fuel a move to the downside. Okay? And this is even before the CFTC data comes out. And so what ends up happening? We see price entering into these selling areas, and then we have a reaction to the downside. And then the CFTC data comes out, and lo and behold, what do we see? Profit taking on long positions. Okay? Same thing happened just recently with the US dollar Japanese yen as well. We locate these areas, we see as price enters into these areas, and we make a forecast. And then later on, the data comes out, and more times than not, we are dead on with exactly what we had forecasted. Okay? So supply comes into play. Banks are taking profits on short positions, which fuels a move to the downside in the dollar. Now, here is a buying area, an institutional buying area. You see what happened? Price came down, hit the institutional buying area, rallied up. You see that big move to the upside? Guess what? After that, it came right back down. You see how it's testing a little bit deeper into that area? It's finding the liquidity down there and coming back up from the buying, from the institutional buying zone down here. Okay? Now, is this going to last? That's the question. Is this going to last and then fuel a big move to the downside? Or is this area going to eventually break and head lower? Well, the evidence is suggesting that there's a very good chance that price is going to be heading lower. Okay? Down to this area here. All right? Now, if the dollar was to drop that far, what do you think is going to happen with gold? Okay? Right. Likely going to head higher. Now, could it hold that area of supply that we're looking at on the gold chart? It's possible. It's very possible. But it's becoming more likely that if the dollar drops this far, we're going to see a lot of pressure on gold to the upside. So I'm not trading gold right now. I was short. I got out near the lows. And it was a very profitable trade. It worked out perfectly. Now I'm just sitting back, relaxing, and waiting to see how things are going to play out going forward. Watching the dollar right now is the key thing for me, okay? Because, you know, if I believe that the dollar is going to drop through, then there's going to be structures that are going to be built to support a move to the downside, okay? Here's a 4-hour chart of the dollar. Here's that buying area that I was just speaking about, okay? And take a look. We have a drop to contact the buying area, then a rally. Then a drop to contact the buying area, lower than the previous low. So we're getting downward structures now being built, okay? You see the structures on the dollar? Downwards, pointing downwards. Now, does that mean price is going to go lower? It doesn't necessarily mean price is going to go lower, but it's hinting that price is going to go lower. One of the other hints is the fact that price came here and then price came lower the second time it tested. Why is that? Well, because think about it. If the banks were accumulating dollars at this buying zone that we located, then would they not be accumulating it from the first test of this buying zone? Right? Price enters into a buying zone. If they were starting to accumulate, then wouldn't you assume that the next time price got to this very same area, they would continue to accumulate? The answer is yes. Logically, the answer is yes. And when you study how the banks buy and sell on the charts and what it looks like, that's what it would look like. So the fact that it's going lower, what does that tell you? Was there buying here? Question is, or the answer is no, there isn't. So why is it dipping lower? Because the buying that was here, all the orders that were here, that first level of orders have now been removed. Second level of orders are now being used up. If price heads lower, what do you think is going to happen? It's going to go even lower. Why? Because there's going to be another level of orders that they'll probably remove and eventually remove them all by filling in the market with more sell orders. And we'll be tracking those sell orders because they could be used as short-term areas of selling. If the banks are selling there, wouldn't you want to sell there? If you're interested in short-term trading, don't you want to find the short-term trading that the banks are doing, locate their areas of supply, and short those areas? Exactly. Okay, so that's what we're seeing with the dollar. All right, we're seeing this evidence building that this zone here is getting weaker and weaker and weaker, and price wants to continue dropping. All right, so weaker dollar is what we're seeing across the board. And look, man, you can look at the USCAD. We're seeing the same thing. Okay, we're seeing the same thing. Look at this daily chart. Look at this daily chart. Do you see what's happening right here? Okay, this was an institutional buying zone. The banks were buying here. If price was going to go higher, they would use this buying zone to facilitate that move higher. What just happened right here? Are they using this buying zone to facilitate a move higher, or did they just remove a buying zone on a daily chart? They just removed the buying zone on a daily chart. You know what that tells me? Weakness, short-term and medium-term, are likely going to be to the downside. So the US CAD is telling me that weakness is on the board, okay? And then we look at the US dollar Japanese yen, and the same thing. When we look at this weekly chart, look, same thing as what happened with the dollar. We just contacted a very important area of selling, all right? And this is what we're seeing right now. This drop, this move to the downside, okay? All right, so let's get to some of your questions. I see a bunch of questions here. What do we got? Do you think the EU will short soon since it's at a daily and weekly shorting zone? The euro US dollar? I think they will short soon. No, I don't. I think they will go higher because, listen, if the dollar drops, the euro is going to rally, right? So I believe that it will likely go higher. If the dollar drops, the euro is going to go as well in the opposite direction. You just have to remember that right now we're contacting this buying area, okay? That was previously contacted. That's why we're getting this push to the upside. So if you look on the headlines, you're going to see 1,500 reasons why the dollar's rallying right now. They're going to say it's because of the elections, it's because of interest rates, because somebody said something, somebody did something, whatever. There's 100 reasons why. But I'm telling you, the reality is what I just pointed out. Period. Okay? I don't need to look at the headlines to know what's happening in the markets. I don't have to read the Wall Street Journal to see what the Fed is saying to know what the markets are going to do. I don't need to do that. All I have to do is look at the charts, and the charts tell me everything. I look at the CFTC data, and the CFTC data tells me everything I need to know. Everything is there. Okay? How do you think the CPI is going to affect the dollar and the bank's decisions? Questions. Okay, so CPI, right? Inflation. Well, all you have to know is, what's the storyline that we've been talking about? What's the storyline? What's been going on? We got institutional supply on the markets that are coming into play, right? But there's a chance that price could rally on the S&P and head into the meat of the supply, right? There's been headlines that have been coming out saying that the market's likely going to rally because in the past, after midterms, 15% is what the market's rallied. So is there a vested interest to cause a rally in price right now? I'd say yes, there's a vested interest to get people to buy. Okay, but what's required to get people to buy? Why are people being told that they should buy the market? They're only being told to buy the market if we see interest rates slowing down, talks of pivots, right? And then the market should be bullish again. So what does that mean for inflation? That we want to see inflation do what? Start to head lower. So if we see inflation start to head lower, then that will be a bullish sign, because everybody will be thinking, oh, they raised rates just enough to stop the inflation from increasing. Now it's starting to taper off, and it might start even go down, and this is a bullish sign. So if the CPI data comes out and shows that it's a little bit lower than expectations, that's going to be a positive sign. That means investors are going to come in and buy. So I wouldn't be surprised if that's what happens, okay? Because that's the narrative. Now, can they throw a curveball and play this a little bit differently? Yes, they could. Okay, they could play it a little bit differently. But from what I'm gathering, what I'm seeing, the narrative is the institutions are selling. Okay, at the end of the day, that's the storyline. What CPI numbers are going to be, what they're predicting, to me, it makes no difference. Okay, there's going to be a reaction to the CPI data. Let's see, what are they even saying about the CPI? U.S. Inflation rate year over year last time was 8.2. Consensus is 8%. Well, that's crazy. So they're going even higher. Okay, so if the number is 8.6, all right, or 8.4, then that's bad news, right? And you would suspect that the market is going to drop from that. But 8.2, consensus is 8. If it comes out with 8 or even below, then people are going to be happy and they're going to be buying. So I wouldn't be surprised if the actual number will be 8% or even lower. I wouldn't be surprised because everybody will start buying, and then what's going to happen? You know, they're going to be buying from who? Who are they going to be buying from? Okay, remember that. Who are they going to be buying from? The banks who are going to be selling to them. So I wouldn't be surprised if that takes place as well. Okay. How often do we go live? I usually try to go live once a week. But lately, just been a little busy with a lot of stuff behind the scenes with the school, doing classes and, you know, a bunch of stuff. We've been just getting so many students signing up. It's just been ridiculous, and it's been just taking up a lot of my time. So, but once a week is typically what we try to do, to go live, okay? Just to get everybody on the same page. Do we need a strong dollar for the equities to drop? Well, we do suspect that the dollar is going to be going higher. So, yeah, okay. Yeah, I would say so. We suspect over the longer term, very long term, the dollar is going to continue going higher, just like we suspect that the markets are going to drop, okay? And that leads us to TLT bonds, okay? I shorted this sucker, and I got out where? Down here. Isn't that interesting? I got out short right before the bounce, but I thought you couldn't time the markets. I thought it was impossible. Don't ever try to time the markets. Isn't that what they said? Don't try to get out at the very bottom. That's impossible. Yeah, sure. Well, I got out at the very bottom right before the big rally. All right. And now I'm eyeing the TLT to start buying. Okay. I'm eyeing to start buying now because we've uncovered evidence to suggest that the banks might start buying TLT from these lows. And, you know, listen, this is what I'm suspecting is going to happen. Because remember, the way I see the markets, the way I see things is very different than how most people see the markets, okay? And how most people see what's happening in the world. What I personally believe is that when you look at what has transpired over the last few years, okay? I think it's pretty evident, at least to me, that there's a lot of shenanigans going on in the world, especially with our governments, all right? They're not as legitimate as they claim to be. Our leaders that we look to are not as legitimate as they claim to be. Our health officials are not as legitimate. I mean, everything is not as legitimate as they claim to be. And so when we see what's transpired and what caused the inflation, when you pay attention to what's really happening in the world, you'll realize very quickly that the inflation was manufactured, okay? And when you ask yourself, well, who's manufacturing it? You'll find out that it's the same people that control and own the Fed. That's right, control and own the Fed. It's not the federal government, okay? They call it the Fed, but it's not the federal government who runs it and controls it. So the same people and groups that control the Fed are the ones that created the inflation. So if you have a group that created the inflation, and then they're coming out saying that they're going to save us from the inflation, you already know that there's something wrong about that, okay? So you already know that when they increase rates, they're doing it on purpose for a specific reason, and they have a goal towards it. But they can only get away with it as long as the people allow them to get away with it. Eventually, when there's enough pushback, they're going to slow down and say, okay, people are starting to ask questions, so let's do something about it so they don't start to question our credibility. And you can see, you know, when you listen to Jerome Powell and these characters speak, you can see that they're very cautious about what they say, how they say it, and how it's perceived, okay? Because the last thing they ever want is for people to clue in on what's really happening. So when you look at things from that perspective, things start to become a lot clearer, okay? And so what I'm seeing lately is that, I mean, if it was up to the Fed, they would increase rates up to 10%. Do you know that? Okay? Because they would just achieve their agenda a lot quicker. But they know they won't get away with that. But if they had it up to them, that's exactly what they would do, okay? Because if they really wanted to fix inflation, they would just reverse all the things that they did to cause the inflation, period, okay? It wouldn't be that difficult to do. So I think, you know, they're getting on to the point where the pushback is very strong. And I think they're going to have to start to reduce the amount of rate increases, the amounts, and they're going to have to pause. And I think that this is going to happen probably within the next 6 months or so. And when they do that, I think bonds are going to reverse and we're going to see a big rally form, okay? So I think TLT just might be a good long trade very soon, all right? It may take a month, 2 months, 3 months to settle down, but I think this big move up that we timed from the bottom here, I think this is the initial buying that is taking place from the banks, okay? This is the initial buying. And I think over time, when we look back, we might just see something, you know, that looks like that, all right? So I'm just going to leave that with you. I've already spoken to my members about what I'm looking to do with respect to that trade. Okay, any other questions? Could you break down natural gas? NATGAS, this is one that we were talking about not too long ago. Remember when we were here? I was posting about this, okay? When we were here, I said, look, on the daily chart, we have, was it here? Where we had the supply and the demand? Let me see, let me double check. Let me just double check that. The supply and demand, oh, that's the wrong chart, Kev. There we go. Yeah, that's the one. That's the one. Okay. So do you guys remember, maybe you do, maybe you don't, where we had this situation? Let's go back. Where we had this situation, institutional demand. Somebody was asking me, what do you think is going to happen? I said, well, right now you have institutional buying pushing price up and institutional selling pushing price down. So what's going to happen is one of these zones have to break. If supply breaks, price will go higher. If demand breaks, price will go lower. Okay? That's what it came down to. And so what took place? Look at that. Okay? Demand broke and price has been dropping. Now, what's going on? Well, we have, when we look at the charts, we can see major buying here and major selling here coming from an institutional selling area. All right? So over the longer term, we have the powers of buying a lot stronger than the powers of selling. But price is going to sit within this range until it breaks out. But once this area breaks out, there's no stopping how high natural gas can head. Okay? But I can tell you that institutional buying is the main force that's taking place in the markets right now. Okay? Good morning, Kev. Please, what is your idea on Euro US dollar? Well, we just talked about it. You can go back later on and take a look at the chart, okay? Look at the video and see the details of what we were talking about. All right. Is there any other markets that we said we'd look at that we haven't? No, I think we looked at all of them. Okay, good. All right. Do you guys feel like we're on the same page? Do you guys feel like you're well prepared for what's going to happen? Okay, because the one thing I hate seeing is when traders lose money. I hate seeing that. I hate seeing when traders lose money. And I hate seeing when traders make the wrong decisions. Okay? And it's so easy to fall into the traps. Like I said, so easy to fall into the traps. Why? Because the traps are constantly being set for everybody to fall into. Okay? Unfortunately, that's how it works. That's how these market works. And when you can wrap your mind around that and come to realize that we are constantly being bombarded with information, and 99.99999% of it is not telling you the reality of what's really happening in the markets. Again, because when you know what's really happening, then logically you can come to conclusions. And when your logical conclusions are mostly correct most of the times, then that means the logic you're using to come to those conclusions is based in reality. And when your reality is based on the fact that the banks move the markets, and we can see it by looking at the non-commercials on the CFTC report, and we can track their movements on the charts using the supply and demand techniques and concepts and principles that we teach at the school, then you see exactly what's going on. You don't need much of anything else. So for me, trading is very simple. It's very simple. It requires a lot of work, a lot of effort, but I'm not confused as what's going on. And if there's ever a time where things aren't clear, I know what I have to watch for it to become clear. So trading for me is very, very simple. I don't get stressed out. Back in the day when I first started trading, and I didn't realize these concepts, I didn't realize these things yet because I didn't learn them, I was very stressed every time I had to trade. Very stressed out. Because it was like the market's so random and there's information coming from left, right, and center. And, you know, logically you think you should do this, but then the market does the opposite. It was like too many times those things were happening, you know? So anyways, I hope we're on the same page. That's it. Okay? Meet us on the Telegram channel. There are a couple fakes out there. I'll tell you, if you type in White Oak FX, you'll see some fake accounts that are trying to sell you nonsense, sell you signals and sell you this and sell you that. Listen, on the Telegram channel, we're not trying to get you to invest money on signals or any of that stuff. We have whiteoakfx.com. That's our school. If you want to come and learn these concepts and principles that we talk about, if you want to see what I'm doing with my personal portfolio and the positions I'm looking to take and my analysis up to date, that's where you go, whiteoakfx.com. Any other Telegram channel that's using my logo and using my company name, even though I've reported it and several of you have reported it with Telegram, they still haven't done anything about it. Just avoid them because they're scam artists, they're liars, and they're just trying to take your money, okay? All right, so join us on Telegram. You can find us at, Supply and Demand Trading. Okay, or if you type in White Oak FX, Supply and Demand Trading, you'll find us. There's links on our website too. You could just go to whiteoakfx.com, scroll down to the very bottom of the page, and all our links are there. Facebook, Twitter, Instagram, and YouTube. Oh, hold on. Here it is. Down here. Telegram. Okay? Just click on that. Supply, demand, Forex trading. Well, we do a lot more than just Forex too, but at the time we were just doing Forex. Okay, ladies and gents, that's it. Thank you for joining today. I hope you enjoyed it. I had a good time chatting with you guys. Hit the like button if you don't mind. And if you want to subscribe, please subscribe if you haven't already. That way you'll get notifications. Click on the notifications. That way you'll get informed of next time we do our live. And we'll try to do another one next week, okay? We'll try to do it on a weekly basis. Okay, thanks. Take care. Enjoy, everybody.